It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, March 3rd, 2016, wrapping up this week with our final newsletter of the first week of the month of March. Hope you guys had a great week with us. Don't forget, no newsletter on Friday. The next newsletter will be around 7 p.m. Eastern Time on Monday evening. Now, we have another exciting newsletter in store for you guys and gals tonight. We're covering crude, S&P, gold, and, of course, the euro. Crude oil is range-bound this evening with a bull bias, and a recent test of the highs tells us to look and expect rotation back to the lows. We'll be looking for bear traps to buy the lows tomorrow on the oil. E-mini S&P is bullish, but we hit our head and shoulders target from last night's newsletter, so we're too expensive to buy this high up, and be looking for a two-legged correction tomorrow to buy more on the E-mini. Gold, the yellow metal, is bullish, but we have three pushes today into an overshoot of the channel highs, which gives sellers an opportunity to fade the high of day, and buyers will wait for a deep correction. The euro is also bullish, but trading at multiple levels of resistance this evening, which tells us to expect buyers to try once more before they give up and let this price collapse off today's highs. Beautiful setup from last night's newsletter on both gold and euro. Hope you guys are able to make a few dollars off that today. Before we jump into our charts for tomorrow and put together the strategies, I do want to remind you the only place to watch this full-length newsletter video covering all of these markets is on our trading blog here at Sideways Markets. If you're watching the video on our YouTube channel right now, not to worry, there's a link right in the description of the YouTube video. Follow that link, come over here to Sideways Markets, and you'll be able to watch the full-length video. While you're here, don't forget to grab a free pass to come out and join me in our trade room as a guest. Register for our nightly newsletter mailing list in the lower left-hand corner, and of course, grab a copy of all the charts you see me using in tonight's newsletter. That way you'll have all the charts ready for tomorrow. Register for our free trial membership on the opposite side, on the right-hand side. Don't forget, the trial membership will teach you more about all the strategies that we use here at School of Trade, right? Not the same thing as your free pass. Make sure you register for the trial on the right-hand side. And of course, don't forget, I've always got someone standing by 24/7, 365 to give you guys any answers to your important questions anytime you need them. Don't forget, make sure you register for that nightly newsletter mailing list. That way you'll get an email from me every evening when the full-length video is posted. Ready to rock and roll? Put on the helmet, fasten the seatbelts. We got a busy session for you tomorrow. Tomorrow, Friday, March the 4th, we have news at 8:30 a.m., and ultimately we have two big components going into tomorrow's session. First of all, we have the, drum roll please, the big non-farm payroll number. The first Friday of every 1 month, excluding Fridays of the first day of the month, every Friday or every first Friday of the month, unless the first day of the month is a Friday, we have the employment situation, the non-farm payroll report. This is one of the very few technical news releases that are going to have a very substantial long-term impact on the markets that we trade. The most important thing that you need to be aware of tomorrow is we're not going to touch this thing before 8:30. As you saw today, price action gets a little bit fluttery right before the news comes out tomorrow morning. We'll be sitting on hands here until after 8:30 a.m. and then usually around 8:40, 8:45, all the whippiness right will be done and we'll be able to trade the reaction. We typically get one of two reactions around the employment situation number. It's either going to be completely sideways and quiet, or it's going to be too volatile to trade. Either way, sit on hands, give it at least 10 minutes after that news comes out to make sure that you get all the gamblers out of the market, right, and all the whippy volatility that follows that news. People have been tracking this news number since we got the employment number at 8:15 on Wednesday. That means there's been almost 2 full days, right, since they had the ability now to quote-unquote price in this anticipated news. The number that comes out tomorrow, if it is within expectations, it should not surprise anybody, and price will tend to sit. If the number tomorrow morning comes out higher or lower, basically outside of expectations, then we expect there to be a dramatic volatile reaction. Whether it just sits there at 8:30 tomorrow or whether it whips around, give it 10 minutes. If it sits there, it will get back to its previously scheduled programming. If it whips around, we're going to wait for that wild animal to calm down, and then we're going to follow the direction of the move. One more thing I need to comment on about tomorrow morning. What I'm going to discuss tonight are going to be levels of support and resistance that are not guaranteed to hold if this news produces a crazy runaway freight train market. It doesn't happen often, but big news like tomorrow's employment situation number may produce a freight train, a runaway market, and it may mean that resistance and support levels are not going to hold. Please promise me that if we get into that situation tomorrow, you're not going to fade these moves. I don't want to get any emails tomorrow saying, Joe, you said sell the high. I always wait for proof. We do not blindly sell resistance or blindly buy support. And again, tomorrow is that day where this is one of the big news events. If it catches people off guard and the market turns, you cannot trade against it. This is one of those times where employment number, right, or non-farm payrolls, FOMC announcements, right, big political events, big speeches, things like that have this real dramatic impact. We're going to have to really play it by ear tomorrow morning after it comes out. So if it starts really moving fast, I want you to promise me you're not going to do anything too aggressive. Go with the move. Don't try to stop a freight train on a dime, right? Don't try to catch that falling knife. Follow the plan, but the plan will only go so far when we have these huge, enormous pieces of news that's scheduled out there for tomorrow morning. Now, remember, we're going to open up our trade room tomorrow morning at 8 a.m. Eastern Time, and we're going to do all of that live in real time. So you don't need to do it on your own. I just want to make sure nobody gets run over because there was some resistance in the way, and we just blew right through resistance. We never blindly sell resistance or buy support. We always wait for confirmation. We always wait for proof, right? And if you don't know what that proof looks like, that should be your first clue that you need to get some education and you need a little bit more experience before you're trading an employment number news event. The second thing I want to remind you about is tomorrow's a Friday. Fridays are always early in, early out. That means I'm going to be adding positions until about 11 o'clock Eastern Time, but I will not be getting into new positions after 11 a.m. Eastern Time on Fridays. It's okay to hold positions into the closing bell on Friday. I will not hold positions into the weekend, right? Not in today's environment. So into positions before 11 o'clock, and then feel free to hold into the close, but no new positions after 11 o'clock. It's too unreliable. And then most importantly, make sure you know what time the electronic session closes on Friday, right? It's either 5 o'clock, 5:15, 4:30, depending on the market you're trading. And of course, make sure you're out of those trades right before the end of the session. Okay? Now that you know the deal on that, let's jump into our charts here tonight. Looking at crude oil, we'll go crude, E-mini S&P, gold, and euro. Crude is range bound this evening with a bull bias, and a recent test of the highs tells us to expect rotation back to the lows, and we will be looking for bear traps to buy the lows tomorrow. We have a multi-day range, multiple trend lines, and measured moves to work with this evening on this chart. The trading range is bullish and tells us to use rotation and the 2-try rule to find the best trading opportunities. And with that recent failure up at the highs, we expect the sellers to run price back to range lows before the buyers can buy it up again. As you can see, we have our bullish move into this multi-day trading range. As expected, we trap the low, we shoot to the high, we trap the high, and now we should be shooting towards that low. The trading range right now tells us really two important things. First, we expect rotation back down to that low, and we'll look for seller failure at the low to buy the low. We also know that if this turns into a runaway at those lows, they're going to be hunting for 33.53, right, which is the next range expansion. We also know, too, that if we fail to get to that rotation target at 34.32, that will be seen as a very bullish clue, and price will then try to run up to next areas of resistance overhead. 35.11, trendline resistance, measured move target, and of course, 35.90 will be the ultimate target, right, for the bulls. So the trading range, again, tells us to expect price to test the low. If it tests the low, we're looking for 2 tries from the sellers, buy into their failure. If it cannot get to that 34.32, we already have 1 try, right? We'll give it a second try. If they can't get to that 34.32, it will be seen as a very, very weak bearish clue, which will be bought. Targets back at the high, right? Targets at trend line, targets at the next area of range resistance at 35.90. Let's keep going. Next up, where do we leave off here, right? Using the 2-try rule, right? We talked about that before. Trend lines here right now. As you can see, we also have multiple trend lines here. Quite a few of them actually, right? There are numbers of trend lines that can be used as support and resistance. I've really got my eye on this one right here, right? This trend line coming off these lows. This is where you're going to get a nice, tasty bear trap, right? As you can see here, when that plays into buying the low of this range, right, it really makes a lot of sense. You can also see number 3 tonight is the measured moves. Measured move up sends us to 35.51. Measured move down, which really is the most interesting here right now because, as we talked before, that measured move down really gives us a nice, tasty little area there, right around that 34. And again, put it all together. The trading range tells us to buy the low of the range, right? Look to buy the low of the range. How? Using reversals, failures, right? We look for failures when we trade around ranges. The second thing are the trend lines, right? The trend lines here tell us that if we do make it down to that low, right, we're going to see some trend line support. The measured move tells us as long as we don't break that prior C high, right, we have a measured move target at 34, 33.99, give or take a few ticks there, right? And so all of that area is now looked at as major support. Price gets down, seller failure, buy it back up. If they happen to run right through this level of support, we know where they're running to. It's 33.53, which also lines up right about with that double bottom, right, that we saw from yesterday's session. Again, if price shoots higher, you can use these trend lines overhead as targets. But remember, we're going to be using rotation back to the high of that range, major measured moves, right? And of course, right, that 35.90 will also make a nice, easy target. You got a good plan there for crude oil. It all hinges tomorrow on what that news number comes out as. Come out and join me tomorrow morning live in real time at 8 a.m. and we'll trade it together. Next up here, on to the E-mini S&P. E-mini S&P is bullish, but we hit our head and shoulders target from last night. Wouldn't you know, right? Matter of fact. So from the last night's newsletter, we're too expensive to buy this high, and we'll be looking for a 2-legged correction tomorrow to buy more. What a beautiful move today. Remember that inverted head and shoulders we talked about last night? Yeah, go back and check the charts from last night. 1991.25. That was my final target for the head and shoulders target. And you can see they literally took the entire session to get that runner accomplished. We have a trading range, a bull channel, and 3 pushes higher to work with this evening. The trading range shows perfect rotation inside and outside of the range, and we're now testing the range resistance at 1991 even, right? 1990.81. We'll call it 1991 even. This tells us that the original range will always be a price magnet. Remember, whenever we have the original range, right, we buy it back up, price goes up, it's going to try to get back into that original range, right? We also know that that original range gave us some great resistance areas overhead, right? And that lined up beautifully with that head and shoulders target that we talked about in last night's newsletter, right? So next areas of resistance overhead, 96, 91, 85, 54, 80 quarter, right, and 75 even. Remember, we started off the session with a trading range. It's going to want to come back to that range, right, if the buyers don't take it higher to the next area of resistance. Next up, the bull channel tells us that we are trading near the highs, which is too expensive for professionals to buy all the way up at these highs. So we'll be looking for a correction back to the lows of the channel for the most reliable opportunities tomorrow. Second piece of this puzzle is you can see here we have a bull channel. Channel rotation. Rotate from the low up to the high, and you'll notice we never even came back to the low. This definitely tells us, this definitely illustrates that we've been excessively bullish here today. Not a real big surprise. We talked about, right, the target up at 1991 quarter in last night's newsletter, and it was very obvious they were simply trying to get that target accomplished here today. So the channel tells us to buy the low of the channel, right? Buy the low of the channel. And this